Hey, what's up guys? John here. California has now officially enacted a new eviction moratorium. This is in Marion County. This is just north of San Francisco, right across the Golden Gate Bridge. The population in Marion County is about 257,000 people. 257,000 people. Now, why they are enacting this eviction moratorium is that they believe that it's not right to evict the tenant, especially during what's going on in today's world. They say that we need this eviction moratorium to enact and to further distribute funds to landlords. Now, what we've learned over the last couple of years, there's some really valuable lessons here. They promised money for over 2 years and yet to really distribute anything. What we're seeing now is this discrepancy versus value and perceived value when we're looking at multifamily real estate investing in certain markets. What I think is happening right now is, previously when you would invest in a property, you would look at a couple different things. Obviously, you would look at potential rents and current rents, the neighborhood, crime, the location, and there's a couple factors you would put in together, and then you would look at it and be like, okay, well, how much is the land worth? How much is the property actually worth? What would it cost me to rebuild this? What's the discount if I were to buy this property? What's the potential? How much money do I need? Is the risk reward there, right? Very similar to how some people will invest in stocks. They'll say, you know what, I'm going to make a stock investment in this company because, I believe in the CEO. I believe in, their business plan. I believe in their growth. They have a strong, competitive advantage. They have strong assets. Like, there's something here. I'm going to invest in it because it makes sense. But now what we're starting to see is this dynamic between what a really, really good investment is versus maybe what it is going to be. What we're seeing is all the perceived risk associated with multifamily investing, especially in a place like California, but yet the opportunity is getting pulled away. And that opportunity is in the sense of property ownership, like the actual ability to own and operate your own property on your own terms and conditions. That is getting pulled away. What I mean by this is when you enact a property, eviction moratorium, which this would be a foreign language 3 years ago, but now it's very normal, to have an eviction moratorium. For example, in Los Angeles, they have an eviction moratorium until June of 2023, right? All these landlords, all these people holding properties, still having to pay, maintenance, still having to pay property tax, still having to pay everything associated with owning that property, but yet the rent is negotiable. The big question I have about real estate, especially from a landlord perspective over the coming year or two, is how is this relationship with landlord and tenant going to be modified with rising prices across the board, whether it be through rising gas prices, rising food prices, everything's going to get more expensive. And what I think is going to happen is we're going to see more of these moratoriums coming into play. These moratoriums are going to be there to, safeguard tenants and protect tenants, when in reality, the landlords, many of which, about 76% of all landlords in America are mom and pop, many of these landlords have the same problems that tenants do, right? And they have increased costs. And so what we are likely going to be seeing here, I think, is going to be more moratoriums coming in the future. And these moratoriums are going to be there to, protect these tenants, is what they're going to say. They're going to promise more checks. This is what I believe. I love real estate investing. I got into real estate, in 2008. I always love real estate. It's always, I believe, one of the main wealth builders in this country, in this world, is by owning property, owning real estate. There's so many benefits that come with property ownership, but we have to take into consideration the risk that are now associated, because these new risks are not being factored into these prices. People are paying so much money for a property in which they have very little control over, especially in a landlord-tenant relationship in certain places. And so as this starts to modify, we have to ask ourselves, what's a fair value to pay for a property here? Does it make sense to actually move forward on this purchase, especially as we see interest rates increasing, meaning everything is going to get more expensive, including the loans on these properties, including everyday consumer debt, former debt that consumers are making payments on. Everything is going to get more expensive. As this happens, I can promise you the investing landscape is going to change. And so what I'm looking at here, I'm like, okay, well, a moratorium on a situation that was enacted over 2 years ago, they're still pushing this forward. There has to be a real goal here. There has to be a long-term, solution in which they're moving to. Because if the whole premise was that they had to send out checks, they would have sent these checks out right around the same time as the first round of stimulus checks, right? 2.5 years to send checks, that to me is very questionable. And we start to look at other locations, for example, in Florida, they're talking about, housing emergencies. They're talking about, increasing rents and the cost of living. Everything is so expensive. But what they're really doing is pointing the finger at landlords, saying that this is one of the main reasons why it is the way that it is. Now, I do believe real estate is going to eventually be an amazing investment, but I do believe also that we're witnessing an era where we're going to see a lot of mom and pop landlords get completely wiped out due to increased leverage and lack of property rights in the state of California. And we're also going to start to see this coupled in with insurance problems. We're seeing insurance companies pull out of certain markets, and insurance companies are increasing rates. Utility bills are getting more expensive, repairing property is getting more expensive, labor costs are getting more expensive. For all of this, we have to take this into consideration. When you're about to buy a rental property, what is the upside? What is the risk? No one's really factoring in the newfound risk in these deals. I'm looking at them in the MLS. I'm looking at them, online. People are paying insane prices for properties as if, the biggest problem in the world is inflation, when in reality, the biggest problem is freedom over property, right? If you do not have full control over your property to be able to select a tenant that you think is highly capable of paying rent, that's going to be the best tenant, that is going to, abide by the rules in the contract. If this is no longer at your choice, there's a problem here, right? And then that big question is, what is the fair price to pay for that, right? What is the fair price to pay? We look at California, they say that they want to invest aggressively into affordable housing and that they really, really want to do this. But you look at all these things that they're enacting, it's almost as if they're setting the stage for the landscape to be so bad for everyday mom and pop investors and everyday mom and pop property owners that they just want to walk away from their properties, and California is going to step forward and start acquiring. California's already purchased over 6,000 apartments. 6,000 apartments. And they did this inside of 90 days at the end of 2021. They're slowly accumulating more and more and more. There has to be a reason for this. I believe, they're now issuing out more universal basic income, stimulus payments. They're issuing $17 billion in assistance. They're doing all of this stuff to build out a new type of relationship with the residents of California. And I think there's more here. I think there's a big picture that's being unfolded right now in the state of California that we all should be paying attention to. Even if you live in Florida, you live in Texas, it's coming there too. This is not going to be just a California problem. Again, I do love real estate. I love real estate investing. There's no doubt about that. But what there is doubt of is where this goes over the next 12 months or 24 months. I think we all need to be very smart and be forward thinking and paying attention to all of these stories, all of these things that are happening. It's easier to ignore it and say, you know what, John, that's negative. I'm going to focus on investing. I'm going to focus on this. That's great, but you should also focus on the risk that could impact your investment so you can make smarter, well-informed investments that are going to succeed and last and stand the test of time. What do you think about this entire situation, about this new eviction moratorium in the state of California? Drop your comments below. Let's talk about this. Subscribe here. Also subscribe on my second channel. It's going to be an interactive call-in show this upcoming week. It's pinned at the top comment below this video. Feel free to subscribe there. Also, LinkedIn, Twitter, Instagram, and TikTok up in the banner for short-form content. If you need assistance with fixing your credit, you want to invest in real estate when the market crashes, or you want to get started on YouTube, you can do all of these things and more at cashnow.video. I'll catch you guys in the next one. If you're interested in being sponsored on my YouTube channel, visit cashnow.video/sponsor and fill out the application.